The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Hi folks, Basil Chapman sitting in for Tommy O'Brien. Yep, this is the morning market kickoff, and this is the time. I do not do the fundamentals as Tommy does. He does a fabulous job, but let's just go through the technicals right here. We're looking at the Dow that made an all-time high yesterday, 35,192. It pulled back sharply. It closed just a tad under the 14-period exponential moving average. Not so good. However, the new all-time high in this particular lettering of the Chapman wave notation, I'll just show you this quickly. Oh, I had it already. There it is. We're always looking to identify the lowest low bar and then merely count each successively higher peak, alphabetize them A through G, but it's at that fourth highest peak, A, B, C, D, that fourth highest peak, where other things can happen. Yep, because sometimes it just pops quickly to an E and then it pulls back. Sometimes it continues. That's where it could recycle to a whole new upside move. But what's really important here is you see the little doji candle there, and then it went to the high of the 16th of July at 35,090, pulled back sharply to the 19th. Within a couple of days, it's down to 33,091. Actually, it was 2 days. And then it ran sharply higher. And because it went over, closed over the, and went over the 35,090 level of the 16th of July, I have to notate this. So if you consider that was a top, that was a bottom at 33,981. In fact, now I should put in an up arrow because I have no choice. We've already got three peaks, and the MACD is good. Stochastic is over 80% to 87%. The MACD just barely crossed negative yesterday, but everything else is positive. It suggests there's residual strength, number one. And number two is that this is peak A, peak B. Yes, the alternate count G/B. You never get an H, so you have to continue the notation. So that's C. Therefore, we should get maybe a day of consolidation, and then we should get an attempt to get to a leg D, and that's where I will start to become somewhat cautious. At this particular point, we only have longs in our portfolio for the Chapman Wave newsletter. That's the opening call. But look, in the rectangle formation that I always discuss, I spend a lot of time, I've had webinars on this. Where there's a sideways move, the chances are that to break above the left side high, in this case, that 35,091 level of July the 16th, that becomes, no, that's the level that we were looking at right here of the 14th of May. That these months of sideways action suggest that to break above the resistance in that 35,100-ish or 200 level is going to take a lot of effort, and you need to see a 35,250, 35,300 close to say, now we've turned this whole area into at least the halfway point, the 34,500 area, into support. We've raised the level of support. But as long as this continues to be trapped within the rectangle formation, it says maybe nominal highs above the trend line resistance. And then you've got to be careful because there could be a pullback of 1/3, even to a half of the whole rectangle. That's why it was so important. We were looking at the S&P, that the S&P not only broke out of a potential rectangle formation, it spiraled higher, and it went all the way from the 4393.68 level of the 14th of July in a V-shaped pattern, turned that level of 4393 into a support, and here we are at 4387, just a tad under it, but having traded a lot of 6 or 7 sessions into the 4,400. So yeah, this is a very important moment. And in the daily chart, there is really no other way to count it other than to say, yes, we've had an alternate count. That could be a possible D at 4449.27 on, I'll tell you the date right now. Whoops, 44. Why do I say 4449? I think I switched numbers around. It should be 44 442997. Let me do that again. 4429. Was that a 97? No, I can't remember. I mixed up all the numbers. Yeah, so this is going to be very important. Into the 97, correct. So into the 4430s would be really, really good action, and that's what's needed right now. And the rotation, look at this. The rotation into the Qs for that big move up to the high of the 26 or so, at 368.89. What was the date? 26. We've gone sideways, making this kind of triangle pattern. And if you look at something like an Amazon, which was the absolute leader, in fact, I'll do this in my show, the Tiger Technicians are coming up at 10 o'clock. But in the meantime, have a look at this pullback. There's a pattern that I call the dreaded H. Let me just show you the pattern right here. There it is. All about patterns. Straight down, makes an arch formation at a peak A or B. It fails and takes out the left side low. That becomes an A minus or a B minus. And then it can have a one-to-one of the arch high to the base, left side base of the H. And it could go all the way. Well, it did exactly that. So Amazon is up 5 pre-market at 337.10. Yesterday was an inside red day. It didn't take out the left side low of the gap down day. That's important, and that says, okay, now there's a chance that you can try, at least try, for the high of the 30th of July. The gap down high was 3368.14. Now, this all pertains to the QQQs, and you've seen that. I mean, you've got DocuSign. Let's just go to some of the leadership there. Look, DocuSign made, here again, I'm not sure what we're going to call this. Is that a peak B failure? It's a very unusual thing. I have to go back and do a notation here and see exactly what it could be. Is there any other choice in the Chapman Wave methodology? You can't change the methodology. It's got to fit. So this could be an alternate count, but certainly DocuSign ran up to an all-time high with a Chapman Wave 2-bar reversal, 310.51 on the 22nd, and then look at that, 310.29, just 30 cents. Below, and look at this, you get 2-bar reversal so far. The MACD's down, stochastics under 80%, but that 9-period moving average is still way above the 14, and that's a good sign. This could be called a Chapman Wave Roman candle. Don't want to go into it now, other than to say a stock like DocuSign, electronic signing, which is an incredible company in the 21st century, this 22nd century. This is really important because it pertains to, regardless of COVID, regardless of anything, electronic documentation is here to stay. It is a really important part. This is a key. There's a leg C in the monthly chart. And if I read this correctly, I have to consider that this is a brand new A in the weekly. I can't believe it. But that's the way it's looking right now. So you've got a couple of stocks that are in leadership roles and are starting to, Amazon's failed now. It's going to take a little while for it to get back again. But DocuSign's still in the running. And I just on a purely technical basis, just add a quick thing. Could you notate it? Let me show you a conservative notation, shows you the Chapman Wave falling axe formation, makes it real simple. A close below 283 in the next week is very negative for DocuSign, but any push, doesn't have to be a close, but any push above 305 would say, aha, try an attempt to try to make a new all-time high. I'll be back in a moment. Basil Chapman sitting for Tommy O'Brien Jr. It's hard to do. I don't do the fundamentals. He does. I'll be back in a moment.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Hi everyone, we're back, and this is Basil Chapman sitting for Tommy O'Brien. This is the morning market kickoff time, and what we're looking at here is just real quickly in the Chapman methodology. This is a leg C. Somehow, some way, there should be. We don't know if it's going to be, but there should be an attempt to get to a leg D, and then we've got to be somewhat cautious. That's all it is. We're in the rectangle formation in the weekly chart. Just wanted to do this real quickly. S&P, just wanted to show you because the futures are up 7.25. What's really important, you see this little cluster formation. I love to draw these little oval patterns. If there is a pop to the 4429.98 level, that starts a leg C. If that is a C, we can only go until leg C goes to a peak C when there's a lower high bar. So that, just imagine for today, I don't think it can be today, but just imagine that there's a push today to the 4429.98 or higher level. That starts a leg C. In leg C, you have to wait for a peak C. You can't do anything until you get to the peak, a lower high bar. That's a daily chart. You have to wait. Let's say it's today's C, tomorrow's D. Tomorrow is Wednesday. Then you get your leg D to the upside, and that is Thursday. Then on Friday, we get your peak D. So it'll take you until Friday to act at the absolute earliest to get to a D. That's number one. So there's time on our side, if correct. If there is a plunge below 43.70 today or tomorrow, no, I shouldn't say a plunge because we're already at 43.87. If there is a slide and we close below, it's going to make it much harder to do. And I have to consider that there's a chance that we're already starting to roll over. I think it's going to be a little delayed. There's enough skepticism out there and enough nervousness to say, wait, we're expecting the right shoe to drop or whatever the expression is. I suspect it's going to take a little longer. So let me just go in a broader context just to show you the bonds are actually running up 630 seconds at 166 and 630 seconds. You've got this potential U-shaped pattern. And what I do in a situation like this is, let me just draw this for you right here. So this is like a cup formation. And I'm all about cups and arches. Remember, let me just go to this again. What we're looking at is the arch formation or the cup formation, right? So it's 1 is straight line, 2 is a cup, and 3 is an arch. And you can mix the two, 1 and 3 or 1 and 2. And in this particular instance, what we've got is a big move up to a peak D, a pullback in bonds. This is the continuous contract. And now I have to go gray A because it's under the previous peak. And then I'll make it blue for now just because I don't want to take time. And a gray B. I haven't got the MACD. It's just about to cross positive, but it hasn't. Stochastic's very weak at 63%. On balance volume is very good. And what we are looking at here is that there's a potential to retest the previous high in the 167 area. If it does that and goes above, then I have to consider that maybe instead of leg G in the weekly chart, I'm going to call that a G/B because it's what we call a Chapman wave instant restart here. Are we talking bonds? We're talking about bonds weekly having an instant restart. That it doesn't happen that often, but if it does, it means the yields are going to go much lower. So I don't like to jump the gun because we can double top here. This could be, if I draw a straight line here, if I draw the line on the left side, the daily, this is the daily, this is the weekly, this is the monthly, and the monthly is broken out of the resistance area called the Chapman wave inside track repellent zone is now above that. So look at all the technicals, how fabulous they are here. And look, in this particular instance, we're moving to the right, and the technicals are kind of weak. But price is still good because the 9 period is way above the 14, and that's a sign of strength. So it's saying that there's a chance that we get higher bonds. Normally, I would be looking at the market, the leadership pulling back in a sell signal to sell mode as money flows into the safety of bonds. This is a different time period. I've been talking about these four aspects. You've got to think of them completely separately. Bondy, that's bonds. VIXI, that's the volatility index. And I know that Tommy likes to look at it, so it's appropriate right now at 19.16 at the close. So 19.16 right now. It's in the 19s. That's kind of high. That's just saying that there's a little fear out there. And look, if you start to trade in the 20.20 area, that 200-period moving average of 20.83 becomes a magnet. So this is a really important period saying already the nervousness is built into the market, and therefore any surprise to the upside is going to say, oh, no, not again. They buy the dips every single time, and that's going to be what can I say? That's exactly how markets move up. They move up on fear. They climb a wall of worry. Was that Marty Zweig, late Marty Zweig's expression? Climb a wall of worry and don't fight the Fed, the two famous expressions. Yeah, so this is very important because if the VIX index starts to slide in the next couple of days because there's a bit of a rally in the general market, that's going to fuel further buying. All right, so if the VIX remains high, it's kind of putting a cap on, but it doesn't stop the upside. It just says it's going to get harder to do. So here we are. We're talking about the VIX. So we've got Bondy, VIXI, Dolly. That's the dollar, but that's kind of in its own world right now. It's had a fantastic move. It's messing around at the 200 period on this orange line, the 200 period moving average. It went up, it went down, it went up. Now it's back there. It's testing it. It's still at a higher level, but it hasn't made as big a move as it had earlier on back in January to maybe the March high. So January from the 89 level to the 93s, then it pulls back to 89.50, and now it's had a big move to 93, what was it, 93, 20 something, and now it's showing 91.95. So it's in play, but it's not doing that much. And the other one is you got VIXI, Bondy, Dolly, and Goldie. Hi, Goldie. Goldie is trading down 7 at 18.15. Also not. So I've said, let's just ignore those, treat them as, how can I put it? We can treat them as individuals now. There was a relationship before where if the dollar was going higher, gold would go lower. If gold was going higher, the dollar would go lower. But in fact, what we've seen lately is that within the context of the individuality, they're kind of independent, and they are really at this particular point, they're more market sensitive to themselves than affecting or impacting the general market. I think the market right now is Fed related. I think the market right now has its own independence. It has an independence of looking at the Dow. Look at this. the Dow is making a new all-time high. The S&P did, and now it's a little bit under it, but it hasn't failed, but it's under it. The QQQ is the one that I'm watching so closely because it has a couple of stocks. I mean, look, Apple. Apple made a round number high, all-time high at 150.00, and that was June the 17th or something. Let me just give you the exact date. June the 15th, it went to 150. Pulls back to the 14-period moving average, and then has a nice spike, and it goes, I think it was to just under, it went to 149.83. So double top. Look at this, the vertical line right here is way stronger than the vertical line right here, from the 15th to the, what did I say that was, 20th? To the 26th. And now it's not breaking down. It's just holding steady, but it's not leadership. It's really sort of following the market. I'll be back in a moment. Oh, the market will be open in a few minutes. Waiting for that. Be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market, and if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back. Basil Chapman sitting in for Tommy O'Brien. This is the morning market kickoff. We're looking at the futures just jumped up to now $10. We'll see if that can hold. That's going to be really important and even more significant in this overall look at the 1 minute chart. We went to that peak D. I used the Chapman wave right there. I didn't have to because that was an A and a B and a C. So this is all legitimate stuff. And now we're going to see how it holds. The 120-minute chart, sorry, the 10-minute chart did something really unusual. It went to the 200-period moving average, went to an E, then it struggled, did the sine wave move, and then it went to an F, and then it turned down sharply, and it went from the 43.97-ish area down to the 43.85s. And now we're trying to rally in the 10-minute chart. We've just given back some in the 1-minute chart. We'll see what happens. All of this is just part of a very important 2-3 sessions coming up, including yesterday's. Let's just get back to our story. And the story is that we're looking at Apple, we had said, is unchanged right now. We're looking at Amazon. It's probably up just a little bit. It's up $2. This is a failure pattern. In my show, I hope I remember, I'm going to be talking about gaps to the upside, gaps to the downside, how we look at it in the Chapman Wave methodology. The other thing is I wanted to, FANG, I was asked about, go look at FANG. FANG is not the FANG stocks, it's FANG itself. FANG is the Diamondback Energy. See, this is the problem that I've had with the energy sector. Diamondback Energy Inc., FANG is a symbol. 77.41 is up 66 cents. Yesterday, a bunch of stocks, I didn't check on it actually, but a bunch of these stocks came out with earnings. I'm not sure. Let's see. So RIG is in the same category. RIG, yeah, that's touching the 200-period moving average. That's Transocean. You know, this is a tough thing. You would think you would think we're using up more oil. So I just don't understand it. But it made a peak E. Oh, let me just talk to you just briefly. Maybe I'll do it in my show. Look, FANG went from a low bar back in 2020 in the 20s, and it ran to peak ABC. And then underneath it, it had a gray A, a gray B, and a gray C, which didn't take out that previous high. Then there's an overlapping wave that takes out the previous high. It joins the two. That becomes a combined move to the upside. 88.75 from the 5th of March. The week of the 5th of March is the weekly chart. And then it zooms past it right there in the week of the 11th of June, 2021. It goes to 92.11. And then the rule of the overlapping wave, this is called Chapman Wave overlapping wave, is that you should go to at least a D. But when you pull back, you should retest the peak C breakout. Well, it went to an E at 102.53, and lo and behold, 3 weeks ago, it plunged. It went all the way down to 71.35. So this is a real struggle. So I'm going to be watching this. If you've just started a position, the question was looking for an entry, your thoughts. You know, it's acting a little better because it hasn't come back as far in the dreaded H pattern. What I am going to say is, within the context of this particular pattern right now, after the weekly peak E, it's a little early. But if you're interested in the stock right as we're speaking at 77.87, I would start a position. 75.50 was the low today. I would give it 75.35. Start a position right here. You got yourself a 5%. Risk, but you have quite a bit more of a reward if, in fact, it starts to push and then closes above the arch high, because it says you can go to the next level of resistance, a candle, a gap, a moving average. Well, at 79.69, if you go to 79, close above 79.70 in this particular move now, meaning by next week, or later this week, if you're able to do that, then the chances are that the high of the 15th of 84, no, that's too high. That's really much higher. I would just be conservative. Go to the candle high of the 16th, which is 82.91. I'd go one step at a time. But if you're able to do that, nibble right here. As we're speaking, the MACD is very close to turning up. That'll be a big positive. And the next thing is that the stochastic needs a lot of work, especially the unbalanced volume. But this is your opportunity. And I'd even say I wouldn't have a 5% risk. I just put, if you got in now, 77.40, well, $1.50. Give it $1.50. That's all. Okay, question I had was, Baidu, what about those Chinese stocks? Well, Baidu, let's see what that's doing. Let's pull back a little bit. I said that I thought the low of 153.17 might stand just a little bit longer as it attempts to rally. I didn't see a big rally, but I said it could be in a rectangle formation, maybe going to maybe the 170 area. So that's what I'm thinking. Baidu, I'm going to put the FXI in the same category right now. Same thing. There's the island reversal. There are always island reversals in overseas stocks. This is the China. This is the large cap China ETF. It's showing a 40.74. It's down 38 cents. I think it's made at least a low. I don't think it's the low at all, but it's a low, and I think it should try to get to the 41.97 level. So I hope that helps you. Next question I had was, where did it go? It's here. The question was, could I look at natural gas, NG? Natural gas right now is up 7.07 at 4.007. It's got the triangle that it needs a breakout of, this wedge formation. And if it's able to get to, this is a continuous contract at 4.04, whatever you trade, I'm basing this on the continuous contract. If it can close over 4.06, there's a chance that it could test the candle of the 29th of July of 4.097. And if it takes that out, all of a sudden you're looking at the magnet of the high of 4.165, it was made on the 26th of July. I'm saying those are the possibilities if it breaks out. If it just narrows, you could stay in this rectangle formation for just a little longer. And the key support now is at, on the 30th, the low is 3.855. Takes that out, and it'll say, dreaded H pattern, be careful. And it's had a spectacular move, so maybe it just needs a bit of a rest. Meantime, the Dow is up 40 points, the S&P is up 3.25. Tough day today. We'll see what happens. So a question I just came in. Would I look at a stock that I didn't really want to do that? Let's wait and see what happens. I'll do this in my show. Doesn't really pertain to anything that Tommy would be doing. So I know Tommy always looks at different stocks. Let's just look at Disney, because with the COVID situation and the variant, the Delta variant, it's just stuck in a range. It's still holding pretty darn well when you consider what's going on, but at 174.37, just a nice big digestive phase after a huge move up into the 200s, going just in a week. In a month, it went from the 160 area over 200. It's just having a really good consolidation phase. I do have to draw the H pattern in to say, oops, be careful, it is an H pattern, and therefore you've got to watch the 170 key support. It's at 174.40 right now. It's in so many different things that you have to think of the theme parks as just it's part, an important part, but it's kind of part of the big package: movies, entertainment, theme parks, etc. So in the monthly chart, it's just having a big digestive phase after 203.02 March all-time high, and that's what you're looking at. We've got a break coming up. This break is going to give us an opportunity to look at the Russell IWM as we go out. IWM is pulling back again. It's at 219. It's down 90 cents. Got stuck at that jump wave inside track repellent zone. I'll be back. How's it,
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So we're back. And now what we're looking at is, if you give me just a second here, to that. Yeah, so what we're looking at is within the context of all the different aspects of the market, what we're really looking at this stage is how does any weakness formulate in the sense that there is a rally perhaps? How is the rally configured? Is it just a couple of stocks? Is it the Dow that's leading because the Dow is now up 7, the S&P is up 4? Is it are the small caps going to suddenly find some strength, or is that it for the small caps for this particular phase? Look, the Russell 2000 IWM, it's got the two patterns that are really important. One is that it's been repelled from the resistance at the Chapman Wave inside track. Those are the green and the red line there 3 times now. It's actually 4 times if you include today. That's number one. And the other is that within the context of, let me do this, the dreaded H pattern, remember the H pattern that we were looking at before, it has pulled back. But even more important than anything else is that right here, the MACD is kind of okay. The stochastic is rallying. It's this on-balance volume that says that adding up the total of stocks closing up as a running total or closing down has the on-balance volume kind of weak, and it's saying that there isn't enough buying leadership to be able to say the on-balance volume is very strong. So that to me is a sign of weakness, and he's had a pretty good rally from the 209 area to the 224, almost 225. That's not really good enough if you're looking at it in the context of what the other indices have done. So I just wanted to put that into perspective. That's number one. Number two is there are certain stocks that by name alone have been doing very, very well over a period of time, and now sort of fading in the distance. They're not doing quite as well, certainly in the small cap area. Also, you haven't had the strong rally in the oil service, and a lot of those stocks are in the small caps. So there's a lot going on, and that's the reason why I'm saying I'm thinking that we're getting closer and closer to some kind of a more significant time and maybe price consolidation. How it acts as a rotational aspect is so important, because we will find that two things are going on. One is that the former leadership is now dragging those particular indices down because they were so big. They're leadership stocks. They're the big caps. And even in the small cap sector, they could be the big caps of the small cap sector. And the other thing is, when you look at, let me go to IBB, which is the NASDAQ Biotech, holding very nicely. The all-time high was right here back in, right there. I think that was April or May. No, it was February. February at 174.04. I may as well put that in. 174.04. Oh, I think that was 2. I'm going to just put 13 for the moment. and then plunges down to the 143, 144 area. It does an arch formation, successful, makes a U-shaped pattern, and it's working its way nicely back to the highs, but it isn't a straight line. So it's just a steady mover. And if you look at the biotech sector, you'll find that there are enough stocks that are kind of doing okay, that are really helping at least modulate the downside moves by seeing support come in. So IBB in play, not great, but doing very well. Okay? So if you rotate through the different sectors, if you look at the steel stocks, SLX, look at this. It's had a really nice, this is the SLX itself, an Vector Steel ETF. Look at that nice move from the 57s to the 66s, and now it's to 63. But it's really struggling within the rectangle formation, but it's closer to highs than lows. So that's what I'm talking about, that the rotation through the different sectors is really important. All right. Now, I wanted to also, I had a question about the other day. Was it Twilio? Oh, boy, was it? Oh, I wrote it down. TWLO. Yeah, I believe it was Twilio, and I said, just wait on this. I think it might have been Jane had asked me about Twilio. Look, it's got this single leg A to the upside failure pattern. I call it the Eiffel Tower. It looks like uppercase A straight up to the 410 level. Now it pulls back to the 360s. It's trading right now 377.10. I just said hold off a little bit. I want to see what happens over the next coming days. I'd rather be buying strength than buying weakness, because weakness right now, every time you think something's going to rally, it suddenly makes a slightly lower low if it hasn't been a successful winner before. Question the dense statement. Basel Biotech, M&A activity starting up. Question, TBIO taken out for $3.2 billion with a limited early mid-stage pipeline. Yeah, I think that that's going to be the savior for some of the sectors that they're going to be. People are afraid. Look what happened yesterday with Square. People are afraid to short because anything can happen. Not only that, when the stock that you think has weakness and it takes over another company, you say, yes, now it should pull back, because that's what happens in takeovers, and then all of a sudden it screams up a good percentage. Look at this. Yesterday, Square was down 12 early on with the announcement of the takeover of the Australian company, down to the 240 area, and then all of a sudden it closes up. It has a huge move up. It actually almost went to a new all-time high. 283.19 was the high in February. This one went to 280.88. And now it's trading at 273. It's up $1.34, a little bit higher than yesterday's close. So the selectivity is really what I'm talking about. And that just says to me there's enough residual strength to at least attempt to hold a little longer. And at this particular moment, yep, the IBB, yep, in the den, Dave says flat. Yep, it's flat. It made a peak C, I think, here again. I don't see any reason why this shouldn't have at least a pop to a leg D, just like the Dow and the others at 167.83. 1 penny higher than 82 is 83, and that starts leg D. And that says it's getting, once again, in the big this is a small rectangle, but in the very big rectangle formation, look at this. You can go all the way up to there, and what do you get? You get itself a diagonal. Why is it doing that? Okay, grab that. There we go. So within the context of the rectangle formation, if I can ever get this thing to move with me. Why is that taking time, wasting time? There it is. So with the rectangle, I'm going to make it a higher level rectangle formation. That high of 174.04 in the IBB back in the third week of the 13th of Feb. That looks a little distant because I do not like to see peak Ds fail below the previous high, in that case peak E, and that says, oops, you've got to be careful. So I'm suspecting, yep, there's a little bit higher maybe to go, but then IBB takes a breather. And a lot of the indexes, even the SLX, even the silver, XBI question, XBI, trading X at XBI, that is the building. I had this all notated. I don't know what's going on with my trade. A peak B is trading, yeah. So this keeps making the dreaded H failure pattern. That failure pattern has gone to lower lows, and at 123, I just think that this Spider S&P, oh, that's the biotech, of course, biotech, XBI. XBI is the biotech. They're two different things. One is NASDAQ and the other S&P. S&P is much weaker than the NASDAQ. I'll be back in a moment.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yes, so Basil Chapman sitting for Tommy O'Brien. This is the morning market kickoff. Dow's down 96, S&P's down 7. In my show coming up, the Tiger Technicians Hour, I'm going to be discussing a couple of things I've decided over the last week or so. I'm going to add more of the technicals as a learning experience, as I often do in my webinars. I'm going to just do some of them right here and just discuss them out there, the way I look at different things like gaps to the upside and gaps to the downside. That's number one. Next question is we bought a stock yesterday morning. And I saw that later, after we bought it, I saw that the earnings were coming out the same day. But I did the analysis, and I loved the stock. I loved the pattern. I loved everything. I said, we're just going to hold it. I didn't send out any email to subscribers. Fortunately, the earnings came out very nicely, and it's up about 16, 17% from where we got in. Days young, anything can happen, but I would believe strongly in the technicals, and hopefully that stays that way. I'll discuss it in my show. So just to wrap up, if by the end of the day Dow's down 110, yes, we could fail here. I have seen this happen occasionally where you get the lettering. It happened in February, I think, of last year in the daily, but the weekly charts were all ready for a pullback. So all I'm saying is that I'm watching this closely. If the Dow starts to close under 34,600 in the next day or so, I think we might have made some kind of a top. I still see enough residual strength to say there could be a couple of flurries to the upside, and then I'd be careful. But we're in the careful stage right now, so we'll see what happens. If by the end of the day, if after 1:30 the Dow is down more than 80 points, the S&P is down more than 8 points, I suspect it will be a weak close. But if at any point in the next hour or two there's just a sudden energy that is, even if it's selective, and we start to move higher, you have to see the VIX index, which is at 20.27, start to come back into the 19s to really 19.70 to really believe that there could be a stronger rally into the end of the day. This is a devious market in the sense that what you think can happen doesn't always happen at this particular stage, because I think we're kind of overbought in many areas, and that's the reason why I'm being rather careful and rather cautious, and thinking that we're already close to some kind of at least a sideways consolidation, and we'll have to see if there's a rotation. If there's no rotation, then everything comes down together. I think there will be a rotation. So Basil Chapman signing off. I'll be back in a few minutes for the Tiger Technicians Hour, and check out my opening call daily newsletter. Thank you.